Nano Dimension, ticker symbol NNDM. Everyone is going wild about this stock because it's up over 200% in the last few months. There is so much hype around this stock because it looks like it's going to run a lot more. So in this video, we're going to talk about whether you should be buying it and where it can possibly go from here. Now, there's a ton of upside in this stock, but it's also very risky too. It's basically like playing with fire. So if you're going to invest, you got to be really careful. We'll be sure to talk about a few different ways to play this stock in this video too. Now, long story short, Nano Dimension is a 3D printing company. They basically print circuit boards that go into a lot of different electronics. Here's a picture of one of them along with the 3D printer. Now, you guys know that I'm a macro guy, right? And that's why I co-founded MacroOps, which is our global macro research firm. So what we like to do is zoom out on the really big trends, identify those, and then dig in deeper to find the specific plays within that broader trend. Because if you could find a stock that's within that big trend that's already moving, you have a much better chance of making money. A lot of times, whatever stock you pick actually goes up because it's within such a strong trend. So if you want to have the odds in your favor, then you got to find the trend first. Now, our team was tracking the 3D printing trend pretty closely back in the day. And I actually used our company's research to make a test video for Real Vision. If you guys remember, I had a show with them for a while. Well, the test video is what we used to develop that show. And if you don't know Real Vision, it's basically like the Netflix of finance, where they interview every famous investor you could think of, from Stan Druckenmiller to Mark Cuban. So we're going to go back to that test video that I shot to go over this 3D printing trend. And the information I share in there is going to explain why a stock like Nano Dimension is going to do so well, or at least has the potential to. So we're going to throw back to old school AK here for a minute, back when there was a lot less to love, but a lot more cringe and bad jokes. So fair warning about that, but the information is really solid and it applies today as well. And you'll see why. So let's go back and see what old school AK had to say about 3D printing. The 3D printing industry is about to enter a period of exponential growth that the market isn't accounting for at all. But for you to actually see this, I gotta explain two concepts to you. The first is the product adoption S-curve, and the second is the Gartner hype cycle. Okay, so first up, we got the S-curve. Now, what the S-curve does is show the typical growth and maturation process of a new technology through 4 stages. So the first stage, it's the intro or market development stage. So this is when the product is first brought to market, but there's no real proven demand for it. And also the product, it's not fully proved out technically, it's just brand new. So in this stage, the sales are really low and they just kind of creep along. So example of this is tech eyewear. And by that, I mean Google Glass, or more recently, those Snapchat spectacles. Now, when it comes to these things, you know nobody's wearing them. And if you ever see someone wearing them, you immediately think, oh, what a tool. So yeah, there's still no proven demand. This market is just clearly still in the development stage. But then a technology will move to stage 2, which is the market growth stage. So this is where demand accelerates and the size of the total market expands rapidly. This stage is also known as the takeoff stage. So an example of this is when that first iPhone came out. As soon as that happened, smartphones just took off. And that's also when people started making fun of me because I still had my Razr flip phone, which, by the way, I still have not seen a cooler phone than that Razr. So I fully stand by my decision to keep that Razr for so long. But anyway, next the technology moves into stage 3, which is market maturity. At this stage, demand kind of levels off because, the market is saturated. Any growth mostly comes from replacement of old items, and then of course the new family formation rate. And this stage is where we're at with smartphones currently. At this stage, they're all pretty much the same no matter what brand you get, whether it's an iPhone or Android or whatever. And each year there's no new amazing phone being released. It's pretty much the same as the old phone. But nowadays we do have the option to buy a gold iPhone 10 for $1,000. For what? I'm not sure. For a slightly better camera? To make fun of poor people? I don't know. I don't know what the point is. But after stage 3, a technology enters stage 4, which is the market decline. By this point, consumers are pretty much done with the product and sales start to drop. And this is also the time where a new technology is coming along to replace that older one. So a simple example here is when the horse and buggy got replaced by automobiles. And you guys know this happened a long time ago, but yet for some reason, we're still measuring how powerful a car is by seeing how many horses it equals. I don't know, horsepower doesn't make much sense to me. But the key thing here that you want to pay attention to is the growth phase part of the S-curve, because this is obviously where growth starts to accelerate and sales growth becomes exponential. The money starts flooding in. And hint, hint, 3D printing is hitting that stage right now. Okay, now we can move on to the second concept, the Gartner hype cycle. And stick with me now, I promise this is really important for our 3D printing thesis. So basically what this chart will show is the typical hype and narrative cycle around a new technology. And this one progresses in 5 stages. And this is really important because narratives, especially when it comes to extreme hype, that's what drives the stock market. Okay, so the first stage, we got the technology trigger. So this is where a new technology is conceptualized. There's some prototypes made, but there's no real functional product. But either way, it spurs the media's interest. A great example of this is our buddy Elon Musk. This stage is his bread and butter. He loves throwing out these technological ideas and concepts and getting people excited. One of his latest things was that Neuralink project. You know, the one where we're gonna have a computer chip that links up to our brain. The hype surrounding that, you could call that the technology trigger stage. And then from there, it moves to stage 2, which is the peak of inflated expectations. So the new technology is actually implemented by early adopters and there's a ton of publicity around it. So this is like what we just saw in Bitcoin with the huge bubble. That's when we had the Bitcoin bros throwing out buzzwords like blockchain while riding around in their Lambos, you know, all that. Back at the end of 2017, that was the height of stage 2 in Bitcoin hype. Then you move on to stage 3, which is the trial of disillusionment. So this is where the real life flaws and failures of the technology lead to the disappointment of all the people following it. So products end up being dropped by companies and investment kind of turns away. And that's exactly what we're seeing in the crypto space right now. You know, after that bubble popped, we got those same Bitcoin bros just crying themselves to sleep in their soon to be repossessed Lambos. But from there, you move on to stage 4, which is the slope of enlightenment. So at this stage, the new technology's potential for future applications becomes better understood, and more companies start testing it and actually implementing it in their processes. And this is also where you start seeing producers create second-gen products. An example of this is augmented reality. You know, we're finally moving past just video game applications like in Pokemon Go. Oh, and here's another hint. 3D printing is in this stage as well. Then finally, you have stage 5, the plateau of productivity. This is where the tech becomes wildly implemented and everyone understands its market applications. All right, so now we could take these two concepts, the S-curve and the hype cycle, and put them together and see what we get. So you can see here that the hype cycle actually peaks while the technology and its market are still in their infancy. And then right after that hype dies down, that's when the tech actually matures and adoption picks up. Things tend to take off when nobody's paying attention. So okay, let's apply this to the 3D printing industry. As far as the hype curve goes, we hit the peak of inflated expectations back in 2013. And you know, that was back when you saw 3D printing on the front page of everything. And that's back when I thought I'd be able to do stuff like print my own toilet paper and finally break free of those Charmin bears. And I'd be able to print new underwear too when I decided against laundry this week and conveniently ran out of toilet paper last week. But as we've seen, none of that came true. And now the hype has long passed and 3D printing stocks have been dead for the last 4+ years. And by this point, we basically passed through that trial of disillusionment. And now we're actually climbing that slope of enlightenment and we're on our way to that plateau of sweet, sweet productivity. But what's even more important is where we are in the S-curve. And the data shows that the industry is actually in the middle of the growth or takeoff stage. So growth should be increasing exponentially over the next few years. ARK Invest expects 3D printing to grow into a $65 billion industry in the next 5 years. And that's a growth rate of over 40% per year. That's huge. And here's the thing, the real opportunity for 3D printers in the industrial space. So check out this example from Erupt. All 3 of these structures that you see support the same amount of weight, but the one on the far right was made through 3D printing and machine learning. And it actually weighs 75% less and is half the size of the structure on the far left. And that's just crazy. I mean, just look at how different these two things look. How do you even make something that complex, small, and weird looking? Like, you gotta have the assistance of 3D printing and AI. That's the only way. And you know, that makes me excited because I can't imagine what they're gonna figure out to replace milk containers. I mean, will there finally be no more spilling when you're trying to pour out that brand new jug? Because that'd be great. You know, I'm just tired of my milk going everywhere. So please somebody make that happen. So really, when we take a look at 3D printing, we see an industry that, according to the S-curve and the hype cycle we just went over, is about to explode in growth. I hope you were able to survive through that video. I know it was a little rough. I think I'm less cringe now, maybe not. Maybe a year from now I'll look at this video and be like, wow. But you can see how big this trend can be and how Nano Dimension fits right inside of it. They have a ton of runway. And did you hear me mention ARK Invest in that video? Well, it's funny, the first time I heard about Cathie Woods, who's the CEO of ARK Invest, was actually on Real Vision when they first started, which was what, 2015? She was doing interviews on there. And this was before she became a god to reach retail investors. Well, she's been on this trend forever. And this is important to note because recently ARK Invest invested in Nano Dimension. You can see they have over 3.4 million shares. And because people follow Cathie Wood so closely now, this stock just blew up. It's getting pumped in every Reddit thread, every group, everywhere. This video I'm making is probably the 76th YouTube video about it. So with Cathie and every retail investor jumping in, this also makes the stock dangerous. So we know there's a lot of upside based off everything we just covered, but now let's take a look at the downside. First of all, this is a pretty small stock. The market cap is only 405 million and it reached that recently, but it was basically a penny stock just a little bit ago. And this is all this year too. You can see the volume right now, the average is around 20 million. But back in the beginning of this year, like January, February, the volume was what, around 65,000 shares being traded, which is tiny, just so small. Super small stock, very little shares being traded, and that's changing now. Yes, it is becoming more stable, but you can see the type of volatility that you get with these kinds of stocks because they're so small and easily manipulated. This is the problem with penny stocks. So you could see from about January to May, it lost 75% of its value. That's just a few months. And then in a few days, it jumped almost 600%. What is that? Literally like 2 days. And then from there, it fell another 70%. Crazy volatility. And then if we're looking from that last drop to now, we're up over 550% or just around 550. These are insane life-changing swings all within 1 year. And if you want to know why people are talking about it so much, that's why, because you can make a bunch of money really fast. But what no one looks at is the double-edged sword of that type of volatility, is that it can drop really fast too. So if you invest at the wrong time, you could screw yourself. And like I said, there's multiple ways to approach it. You can trade it or you could invest in it. Now, if you invest in it, you got to get ready for big drawdowns. So with Cathie Woods and ARK Invest, they're investors, right? They're going to be in it for the long haul because they have so much money. Not that they could put that much money into such a small stock relatively compared to their whole fund, but they're ready to take the swings and the drawdowns. And for an individual to do that, to do the same thing that they're doing, well, you're going to have to do their level of research too, to be able to stick in that stock when things are going haywire, when they're going crazy. You got to be able to be confident enough in it that you're not going to sell out, which is why, in my opinion, I think trading a stock like this would be much easier, getting in and out. And there's a lot of different ways to play it if we look at the daily chart. So one easy thing to do is just wait for consolidation periods and then breakouts. So here's one right here. This was a consolidation period of about 12 bars, so 12 days. And all you're looking for in a consolidation is the price kind of going sideways and coiling a bit. So you can see that line was set here and it broke out of it on December 21st. And when you see a breakout like that, you could possibly buy in. Now that is a very short-term consolidation of just a few weeks. Back here is an example of a little longer one. You can see the same thing kind of happen. The stock took a dip, consolidated within this range, and then broke out to new highs. So going forward, you could kind of look for those consolidations once again. You can see one's happening right now. So wait for the range to be established and consolidate within that range and then look for the breakout. Another thing you can do is wait for the stock to retrace back to its 50-day moving average, which is this yellow line right here. You can see back here, it would have been a decent place to buy back here too, because when price is going back to that average, that's usually a good signal that it will bounce. But you normally want to wait for the bounce before you get in because it might break that average. And if it does, that's a really bearish signal. So there's a few ways to play it. And really the most important part is creating a strategy and sticking to it, because these stock picks, they don't actually matter as much as your strategy will. Your strategy is what's actually going to help you build wealth consistently in the market, not picking the latest, hottest stock like this one that we're talking about right now. And I'm going to start reminding you guys of this in every single stock pick video that we do, because yeah, it's fun researching into these stocks and buying them, but to make real money, you got to make sure, again, it fits in your strategy. You need to establish that strategy and then stick to it. So if this stock doesn't fall within that strategy, don't invest in it, or do some research to create a strategy around these types of names and section off a small piece of your portfolio to start testing it. So again, there's a lot more to it than just picking a stock. That's 10%. 90% is the actual investment process. That's where all the money is made. And especially in a stock like this that's so volatile, the way you're going to make money in it is if you have those rules in place that you're going to follow. You got to have that discipline. But when you do have that discipline and that strategy and you combine it with trends like this, that's where you can make a ton of money. And there's actually another huge trend that we've been tracking that does not involve penny stocks, and it's a much bigger trend than the one that we talked about in this video. It's way more long-term, like multiple decades, and just a lot more money involved. So there's a lot more money to be made. If you want to check that out, I'm going to put a link to that video right here. Definitely go watch that video so you can see how massive and lucrative this new trend is. You don't want to miss out. So click on this video right here and I will see you there.